Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Swiggy gets shareholders not to increase the size of primary issue of its public issue, says Money Control. The food aggregator will raise the size from 3,750 crore rupees to 5,000 crore rupees. The offer for sale component will remain unchanged.
Specialty chemical startup MStack bags $40 million from Lightspeed, Alpha Wave and others. Eyes geographical expansion with this fundraise will also launch R&D labs in India and the Middle East.
Stockbroking startup Upstock buys back 5% of Ratan Tata's shareholding in the company, returns 10x on his original investment as realized capital, continues to hold 95% of his stake in the company.
Apple plans to add 4 more retail stores in Bengaluru, Pune, Delhi, NCR and Mumbai, say reports. The stores are expected to open next year. Apple has confirmed that it has started making the entire iPhone 16 lineup in India.
OpenAI secures a new $4 billion revolving credit line only a day after it closes a $6.6 billion funding round that cemented its position as one of the most valuable private companies in the world. The borrowing facility will boost its liquidity to $10 billion, allowing the startup to buy costly computing capacity, including NVIDIA chips.
Uber will partner with autonomous technology startup Avride for food deliveries and robotaxi services. Avride and Uber are looking to launch robotaxi rides in Dallas next year. Uber Eats will also begin using sidewalk robots for Avride for deliveries in Austin in the coming weeks.
Well, those are the headlines we've been tracking for you this evening. On what's brewing today, Nazara Technologies, a diversified gaming, esports and sports media company, has acquired a 15.86% stake in Stan through its wholly owned subsidiary, Nazara Dubai FZ. Nazara will purchase 15.86% stake in Stan for close to $2.2 million in an all-cash secondary transaction. To tell us what this acquisition means for the gaming community platform, joining me now is Stan CEO Parth Chadda. Parth, welcome to Startup Street. What does Nazara's backing mean to you? Can you take us through the contours of the deal? Also, how does this acquisition help you expand your reach while empowering content creators?
First of all, thank you so much for having me. We are out there to redefine how gaming and esports is happening in India and global market, and definitely getting Nazara on board with us in this journey fast tracks our speed to the vision which we are chasing. The deal is all about getting them. They've acquired about 15.8% stake in the business, and Nazara's ecosystem is full of they're into game publishing. They're working with some of the game titles which are popular in India and outside India. So with Stan, which is a mobile gaming platform, we're kind of complementing what exists on Nazara's ecosystem today. So it's like the missing piece in the entire puzzle, which I would like to say. And taking their ecosystem's leverage, we would like to keep growing our gamer base and creator base and solving for the gamers and end users.
All right, so take us through your core offerings, your business model. Also tell us where and how do you plan to use the fresh funds raised? Any new offerings in the pipeline?
Sure. Stan, if I give you in one line, it's a gamer's companion app. Till date, gamers were hanging out on different places like WhatsApp, Telegram, Discord, and other platforms, but none of the platforms were doing justice to what the gamers actually need. So that is the problem which we are addressing to. I like to put it in an acronym, which is like CRNF. Gamers always look for content, rewards, and friendship, and that is what they get on Stan. I think every day the team is focusing on how we can deliver that experience to the gamer. We've been growing very fast. We've reached about 15 million gamers now. And the funds definitely help us accelerate our momentum because it's all about network effects when you're building a consumer tech company. We are investing in some cutting-edge technologies while we keep on building some existing features for our audience.
All right, let's now talk about Stan's reach. Your user base has surpassed 15 million. You have over 500,000 paying users. So tell us, how have you been able to achieve strong monetization, and also tell us what is your retention rate?
So just making a correction there, we have crossed about 1 million pairs now.
Okay.
I come from a business family background, and I really look at how we can build strong monetization in the product. And I think what is differentiating in Stan is people are getting those exclusive game experiences on Stan. Like the users, they come to play in these game formats, which is called Stan clubs. That is where like the creators come and they organize like an exclusive game room, and that is something which they are ready to pay for. They're basically paying for content and friendship and a time with their creator. So it's about 2 years from go live, and we have crossed about 15 million base. And I think it's going pretty well. We are clocking close to about more than $500,000 in a month in terms of revenues.
Okay.
And a user is basically spending through the Google in-app purchases, and a part of it which comes to us, part of it goes to creator, and user gets a unique gaming experience on the platform.
Sure. 1 million paying users, that's great, Parth. If you could elaborate on the kind of opportunities you offer for aspiring gamers in terms of early monetization and community building. How do you differentiate yourself in this crowded gaming market?
Yeah, I think that's the biggest thing which we wanted to jump in for. If you look at creators, they're not making too much money. I mean, the guys, like there's a long tail of creators who are still, let's say, at a 50,000, 100,000 subscribers, either sitting on YouTube or platform like Instagram. They're not able to monetize their audience. So what we have solved for these gaming, influencers is that you bring your audience to Stan, and then you can start unlocking these monetization tools. Like if somebody buys a club pass, which is like an entry ticket to the exclusive game room,
Okay.
you get money, right? And these small, these audiences, when they start paying some dollars, the microtransactions, which is the Bharat, which is the UPI, these microtransactions, which we see on all the different categories today, is working well on Stan. And I think that's the differentiating factor, which we have, and we have got these users to kind of monetize for their audience.
All right, Parth, you spoke about your revenue numbers earlier, but take us through your revenue model. What kind of commissions do you charge on in-app purchases made by users? What is the average cost of transactions done on the platform?
So it's not, so just to make a correction, there's nothing like a real money gaming on the platform. You make an in-app purchase for an exclusive content or maybe like an experience on the app. So whatever a user pays comes to us. Obviously, the part of that like goes to the creator. So the creator has its earnings about like 40-50%. So the rest of the 40-50 is our net revenues, what we make. And yeah, I think this is the revenue model which we have.
Okay, so Parth, what is the road to profitability looking like? And also, if you could share with us your future revenue and expansion targets.
I mean, if I tell you, last quarter was profitable on its own, and by choice we are profitable on the platform level, but on a company level we are still making some losses. But if to tell you that maybe like 26-27 FY is where we are looking at for hard focus on profitability, while we are not burning too much capital. The focus is on growth. Like 50 million users right now, we were sitting at 5 million last year, and what we're looking at by the next year, we would be easily doubling the user base, because we have a snowball effect. We have about 70-80% users coming organically. We're trending on the Google Play Store. So I think our revenues as well are going to double by the next Q2 of next year. That's what the targets are looking like.
All right, we do hope you keep doubling your growth numbers. Many thanks, Parth, for joining us on Startup Street. Wish you the very best.
Thank you so much.
Moving on, health-focused bread brand, The Health Factory, has raised $3.5 million in a seed funding round led by Surge Peak 15 Scale-Up program for early-stage startups. Now, the new funds will be used to accelerate The Health Factory's product development and research and development initiatives, enabling the creation of new product segments. Joining me now to discuss this further is Vinay Maheshwari, the founder of The Health Factory. Vinay, thank you so much for taking time out and being here with us on Startup Street. You started this journey in 2018 and you make protein bread, vegan breads and zero maida breads, right? So if you could take us through what led you to start this company and what was the gap you saw that and you were trying to solve for essentially? So we seem to be having some issues there with Vinay's feed. But on that note, let's take a short break and we'll come back and continue this conversation. Stay tuned. More coming up on the other side. Welcome back. You're still with us on Startup Street. Health-focused bread brand, The Health Factory, has raised $3.5 million in a seed funding round led by Search, Peak 15 scale-up program for early-stage startups. Joining me now to discuss their plans with the funds that they've raised is Vinay Maheshwari, the founder of The Health Factory. Vinay, thank you so much for taking time out and being here with us on Startup Street. You know, as I was saying, you started your journey in 2018 and you make protein bread, vegan breads and zero maida breads, right? Take us through what led you to start this company and what was the gap you saw that you were trying to solve for?
Firstly, thanks for having me here. Really excited to share, how it all started. It all began when I was leaving for work and doing 2 to 4 slices of bread every morning. Mom, dad, being from Rajasthan, always came back to me and said, "Ye har roz subah bread kya laga rakha hai? Roti sabzi kha ke ja." And that to me was a very large dam in itself. And then the moment you move from 2 slices of bread to 4 slices of bread, they're like, "Kitna bread khayega?" And then when you tell them, "Hey, you know what, you're still not putting on weight, what's the problem with bread?" They turn back to you and say that, "Aaj nahi, kal pata chalega." So these statements resonate with you. You see, you put a smile on your face as well, right? Because these are things that are happening in an everyday household. So we said that, can we use this opportunity to get the right product market fit? Of course, we didn't have the dollars back then, so we could do little to no research, but just understood the use case behind, what people are actually looking for in good bread. So we said protein, carbs, fibers, fats, how do you minimize some and how do you maximize on some, and then deliver that in a product. So we were the first in the country to launch India's first protein bread, and that's how the journey began. Down the line, when we were building with this product, of course, the product was a little futuristic, and it, of course, attracts a niche. We realized the need to get a simple, classic, good bread. That gives us way into the zero maida journey. We said, why is bread, which is something on every table, and which is a thousands-plus-year-old product going through our application, why is that? Where's that simple, classic, good bread? So we said, what is it? What does this good bread even equal to, right? So we said, can we eliminate preservatives, emulsifiers, chemicals? Can we kill back the sugar? Can we get off the hydrogenated fats? Can we pack it with fiber? Can we give you more nutrition? And that was the journey and the beginning of the zero maida bread.
Absolutely. So making everybody's breakfast that much more healthier, one day at a time. If you could you said it was a tough journey to start with because people didn't understand this, right? So if you could take us to the kind of demand that you're seeing for your products now, obviously with people also being more aware of what goes into their food products. So, and also with prices, obviously, your bread is slightly more expensive than the normal alternative. So how are you staying competitive at this point?
From a price standpoint, if I answer that question first, I see that while we're 20-25% more premium, right? The value of it is so much exponential that it's quite honestly a set-off, according to me. We see that the uptake of the product is much higher because we're seeing that, the consumer is moving towards the healthier trend in terms of even the way he's tracking his steps today, he's counting his calories. So at a marginal level and at an absolute value of give or take 10-15 rupees, the consumer doesn't mind moving towards a healthier alternative. However, with regards to the protein bread, of course, that's a niche and that targets that user set that is seeking out for those grams of protein.
Right.
On the product.
Absolutely. So still in sort of a niche area there. But one of the primary uses of the fundraise is going to be to expand your presence, right? You're currently present across many tier 1 cities. What's the ambition? How many cities do you want to be in and who do you want your main, customers to be?
So from a city standpoint, we're currently in all the metros. Recently started cities like Lucknow, Chandigarh, Ahmedabad, etc. From leg 1, we want to cover and primarily drive the Bombay, Pune, Bangalore's, Delhi's, the Hyderabad, the metros, where we see our first-in-line audience sitting there. The agenda from there is not to spread too wide too soon so that you don't lose track of everything that is happening operationally.
Right.
But then cause depth and choose your battleground and then build depth from street to street, from road to road, from area to area, build a nice solid regional brand in terms of retail and then go to the city and then move to the next city and so on. So I believe once that playbook is ready, replication becomes very easy, but to crack that playbook is very essential. So we want to get that model right. We want to get the right team aligned. We want to get the metrics in control. We want to make sure that we're not burning money for no reason. And that's how we want to approach that.
Absolutely. So, speaking of burning money, you claim to have seen a 65 times increase in sales over the last 24 months. If you could take us through your revenue story, what are the targets for this year? And, how far is profitability?
So currently the brand is profitable. Of
Okay.
course, it's very minuscule, but of course we've been able to understand the P&L and the line items within the P&L really well to optimize in places of, either marketing or operations, and understand and build strong levers around that. We're trying to be a data-driven business in terms of let the data give answers versus things like I think, right? Versus I know. So we're moving towards that kind of an approach. From where we are at currently, rightly so, like you mentioned, right? We've gone through 65x in the last 24 months. We give or take almost at $1 million of revenue. At this moment, from the next 6 months, I think there's the clear path to getting to a double in the next 6 to 8 months.
All right.
That's where we're at.
That's the ambition over the next 6 to 8 months. If you could tell us in 30 seconds your most in-demand product at this point, and are you going to double down on that? Any new offerings in the pipeline? What's next for you?
The most in-demand product, I would say, is a combination of the protein bread and the zero maida bread. So those are our flagship products. So I've got that zero maida bread here. It's just that simple classic, right?
Right.
It works really well. We're seeing amazing demand. We're seeing amazing repeatability. Yes, of course, doubling down on the product is very important. I get a lot of inspiration from brands that are single-focused, single product brands. It's inspiring to see when you get that one product right and take it to the market with the right team and the right infrastructure, there is a right to win. So, of course, we will double down. But, of course, in the future pipeline, we are looking at innovating various other products.
So more new products to come. But Vinay, thank you so much for joining us on the show today. And we wish you all the best on this journey of yours.
Thank you so much. Thanks for having me.
Moving on, also on what's brewing, home and sleep solutions company Wakefit has posted its FY24 financials, marking a return to EBITDA profitability, which it hopes to sustain going ahead. Ritu Singh speaks to its co-founder Chaitanya Ramalinga Gowda on the numbers and more. Take a look.
Well, thanks for that. Direct-to-consumer home and sleep solutions company Wakefit has entered the 1,000 crore rupee plus revenue club and has also returned to EBITDA profitability for the financial year ending FY24. Now, going ahead, it aims to get to a double-digit growth for FY25 as well and will be doubling down on its omni-channel expansion strategy. For more on the growth numbers and the road ahead, I have with me its director and co-founder Chaitanya Ramalinga Gowda. Chaitanya, thank you very much for being with us here on CNBC-TV18. To begin with, what got you to that 1,000 crore plus revenue number? What were the key drivers, and will you sustain this momentum going into FY25?
When 2022's period came in, which was a very tough period for all startups, we doubled down on the frugality. We said we still have to grow at double digits, but we have to ensure that we get back to profitability, which we had lost out when we entered the furniture category about 4 years back. So that was the focus. How do we grow double digit and yet be profitable? And for that, 2 or 3 things played out very well. Number one was the growth in furniture category, where we were able to launch new products that delivered a strong cross-sell with our existing mattress products. So nearly 40% of all of our furniture buyers were mattress product buyers in the past.
I see.
So that really...
Brand loyalty.
Brand loyalty. Sort of a, think of it like Wakefit building a pipeline into the consumer's home. And after the first product gave a good value, they were willing to trust us for a larger share of wallet. The second thing that really helped us was getting into the retail channel. We were reluctant adopters of retail.
Offline retail.
Offline retail. We were always online. So about 2.5 years ago, we ventured into that, and we continue to see a strong growth there.
How soon you return to, do we see you return to PAT profitability?
The focus is always on EBITDA and cash flow, because PAT is nothing but what happens after EBITDA, which is depreciation. As a full stack manufacturing entity, we operate about 7 factories across the country. So there is a certain amount of depreciation that does come in, but these assets are built for the long haul. 10, 12 years is their payoff period. So we are very content that certain depreciation will hit us every year, but as long as we are cash generating and we are EBITDA positive, we are content to run it very steadily.
All right. You spoke about venturing into offline retail in 2022. You've already got about 80 stores, and you want to scale that up to 120 in just the next few months. What is the strategy there? How much of the sale are you seeing incrementally come from your offline centers versus online? How will you play this going forward?
We have stopped tracking individual channels.
Really?
Yes. As an omni-channel,
But you're putting a lot of money going offline.
I'll tell you why. It's not because we don't want to track metrics. It is because there's a better way to track metrics.
Okay.
What we realized as we got into this new channel was that we already had a D2C website. We are already present on multiple marketplaces. Now we've gotten into our own stores. So each channel leader was chasing a local maxima when it came to revenue and profitability goals, which was not necessarily good for the company. So what we've started doing from the last 24 months is to track company level what should be the sales and marketing costs, what should be the channel direct selling expenses. Because customers are extremely thoughtful about researching in all places, but they're not loyal to the point of purchase. As a company, we don't say each channel has to be profitable, but at aggregate, we have to be profitable.
So mattress and sleep solutions is something you've been doing for a while. Furniture is relatively new. It already contributes about 30% of your sales. Just give us a sense of how that business has been. What is the rate at which it's growing?
Furniture, given the smaller base, is growing much faster. It's almost growing at double the pace of mattress. Last year was nearly double. Today it is slightly lesser. But given that base, we continue to see 30-40% growth year on year in the furniture category.
Right.
And mattress is again continuing to grow healthily, but at a lower pace than this.
So tell us, before we end, what FY25 would look like. You've crossed this milestone of 1,000 crores of revenue. You're EBITDA profitable. What would the end of FY25 look like?
We hope to deliver 2 or 3 things. We don't like to take on 20 things. We're very focused. Those 2 or 3 things is number 1. Can we double down on omni-channel and add more stores? Okay. But get even better. We're already profitable at every store level. Can we improve that EBITDA of the store level even more with focused efforts on better selling, better product portfolio, and better delivery experience? Number 2 is with quick commerce coming in, people's expectations on furniture and mattresses also have changed.
Do people want mattresses in 7 minutes now?
You guessed it. Mattresses, pillows, furniture, accessories, they want it in 15 minutes, they want it in 1 hour.
Okay.
So that behavior is changing. So we will continue to make investments in supply chain to be able to deliver faster. Obviously, mattresses is not possible in 10 minutes, but can we deliver same day? Can we deliver in 24 hours? That's a very big part of investment.
Will that be through partners or your own channel?
It depends on the city. There are nearly 8 to 10 cities where we have our own logistics presence. In those cities, we might take on the burden. In some places, we might continue to work with our partners. Okay. The third thing that we want to do is continue to increase the brand recognition. We are probably one of the rare brands where the business has grown faster than the brand's recognition. So we will get it to catch up and drive more awareness and drive more consideration.
Finally, since we've seen a whole host of companies going the public route, you've spoken in the past about a 2 to 4 year timeline. Has that changed at all, or you remain?
Not at all. It still remains the same.
Okay.
We're very happy growing at the pace we are growing. We've got a very supportive board that has no exit pressures. So they're very comfortable waiting, because the earliest investor that came on board is only 6 years in the company. Okay. Because we were bootstrapped in the first 3 years. So we still have the luxury of time. As the preparation goes live, as we are lining up all the internal ducks, we will figure out when is the right time.
All right, and we wish you the best with that, Chaitanya. Thank you very much for your time here today.
Thanks for having me.
It is Friday and it's time to take stock of all the deals from the startup world this week. According to Venture Intelligence, this week saw 17 deals valued at $629 million. Some of the notable deals include Singapore-based Tiga Investments is set to acquire the stake held by China-based Tencent in Indian online gaming service Dream11 for $150 million. Meanwhile, UAE's Redwood acquires majority stake in game streaming platform Loco for $65 million.
And that's not all. Arundhati's specialty chemicals sourcing enabler M-Stack raises $40 million from Lightspeed Venture Partners, Alpha Wave Global and others. Basic Home Loan raises $10.6 million in a Series B round from Ashish Kacholia, Bertelsmann India Investments, Gruhas PropTech and others. Finally, Ayurvedic nutrition brand Kapiva raises $10 million from 314 Capital, Orbind and Vertex. According to Venture Intelligence, this year has seen a total of 302 deals valued at over $8 billion.
And with that, it is a wrap on this edition of Startup Street. More news and updates are coming up on the other side.